Okay, so we just actually finished completing our truck loan, right? So let's go ahead and see what has happened next. We retrieved a bill from NV Utilities, right? Because like I've mentioned before, usually the first month you'll get the bill. And then when you have another monthly statement or another bill that comes into the mail, usually it should be given to you sometime in the middle of the month or at least a week before the actual due date. So in this case, this bill is due. Once again, I think I have the due date on here. Yeah, it is due on August 7th. So here you go. This is what you're being charged, right? Electricity is going to be for $400. We have natural gas for $25. We have water for $50, and we have our city services. So things like trash, right? Community-wise, usually that's something that you have to encounter. So here is our total monthly expenses for the utilities, okay? So let's go ahead and record it. So first off, let's go ahead and determine, since all of these, what are these all considered? Say that, what kind of expense? Utilities expense. Now let's take a look at the chart of accounts. Is utilities expense, are they specified?
Yes.
Yes. So we need to take a look at utilities expense. Right underneath that, first thing you got is city expense. Oops, sorry. You got city expense. Then you have electricity expense, and gas expense, and water expense. So again, that is all 60, 100, 200, 300, 400, 500, 64, yada, yada, yada. Okay? So first things first, let's go ahead and determine this. So in this case, I'm not accruing it because I received a bill. However, I'm not going to pay it yet. I'm going to wait till close to the 7th or even on the 1st of the next month to go ahead and pay for it. So in this case, what I'm doing it, I'm just accruing the expense for the month of July, because this bill right here is for the month of July's utilities. Okay? So again, it is now the 31st. So first things first is I have electricity expense. Okay? So I'm going to go ahead and put that in there. Electricity expense. Okay? I also have gas expense. Okay? I also have water expense. And I also have city expense. Okay? So once again, I believe 60 was 64,100. Electricity was 64,200. Gas was 64,300, and water was 64,500. Okay. So how much was my electricity for? 400. My gas? My water? And my city. And lastly, I'm recognizing this as a bill. So what account am I going to place this on? Accounts payable. Okay. For a grand total of $500. Okay. So just double checking my work to see that my statement balance matches everything. So there it is. And I'm going to go ahead and write this in here. NV utilities bill for July. For right now, the description doesn't really matter as much just because we're just going through the adjustments and I don't have all the information as much as I should have, right? So that's okay. Whatever makes it so that you're able to recognize it, okay? So that's the completion of this journal. So let's go to our ledger. So ledger, we're going to go to operating expenses. Here we are. We're going to go down to our utilities expense. Okay, so here for city, right, should be 25. Giving you an ending balance of 50. Okay. For electricity, should give you 400, giving you a total of 800. For gas, right, we have 25, which give you an ending balance of 50. Oh, okay, 50. Then we don't have telephone expense yet, but we will encounter that. So here, what did I do? Okay, so here, water payable or water expense for $50. Which should give you an ending balance of 100. Okay. And last but not least, we're going to go to our liabilities to recognize that we received another bill from NV Utilities. NV Utilities. Bill for July. For another $500. Okay. So now I have a total of $6,256.19. Okay. Notice this, I am skipping the subsidiary ledger for now just because, once again, you won't be tested on the subsidiary ledger. Okay. You're primarily only responsible for the journal, the general ledger, and the financial forms. So right now, the subsidiary ledger, you can create one if you'd like. I did not provide you a sheet for it, but yes, just for the test, you're not going to be learning to do the subsidiary ledger. That's just something for you guys to keep track of on your own. And I'm not going to focus on here because I just need you guys to just make sure you get through your adjustments. Okay? So no subsidiary ledger for now. So then, what has happened next? Yes, we retrieved the telephone bill. Okay, here, let's take a look. It's going to be due on the 5th of August, okay? As you can see, we have a few things listed on here. We have unlimited telephone minutes, okay, for $49.99. We also purchase unlimited internet, okay, for $79.99. We also opened a line for $9.99, and we also have a telephone. Okay, we purchased a phone from the actual telephone store, so they decided to break it up and place it on our bill. So if you guys know what I'm talking about, when you go get a cell phone, you can purchase the phone from the store and you can make monthly payments, and it's just going to be attached to your bill, just like this. However, when we recognized the cell phone, I actually recognized it as a notes payable because we're making monthly payments to it, right? So therefore, that's something that we owe, that we can defer, right? We don't have to, we could either pay it less or pay it on time or pay more, right? That note payable can also determine, oh, okay, well, what if I want to refinance it once again to extend it for another 6 months? Or if I want to do something like that. So yes, you can, especially with telephone companies, you can negotiate with them and they do work with you. So, but there are a few things that you can and can't do. But in this kind of sense, I recognize my cell phone or my phone that I bought from the company as a notes payable, okay? As something I make monthly payments to. However, this is my statement, right? It includes the $35.99 monthly payment on my phone included into the bill. So it's going to be similar, right? We're going to recognize that this is a bill and that we owe money, but we also have to remember that we do not need to include this monthly payment for my cell phone because it just happens to be attached, but it's a separate thing that I must pay for separately, okay? I just combine it together in one bill to make it more convenient. Very similar to how most cell phone companies do, right? If you're with AT&T, you can also get direct TV incorporated into your bill. But if you have that, are you paying AT&T or are you paying DirecTV? You're paying both. They're two separate bills, but together they just bill you in one. Okay? So that's the same thing that we're going to do here. We're going to recognize that we have two bills combined into one. All right? So in this case, I'm going to recognize this. I'm going to recognize just the bill for my telephone expense, okay? The phone itself, when the day that you pay, you're going to pay a portion towards your accounts payable, to your notes payable, and a portion to your telephone expense, okay? Which in this case we're accruing for this month. So that means I do not need to recognize this $35.95 because I already have an amount in my notes payable. Okay? I don't know if that makes any sense for now, but right now, let's go ahead and recognize this telephone expense. Okay? Was it 400? Okay? And we're going to recognize that this is a bill and that we're going to owe for the accounts payable. 20,000. Okay? So how much is the bill going to be without the cell phone monthly payment? $139.97. Okay? And then I'm going to go ahead and write here telecommunications bill for July. Okay. And now I am going to go to my ledger, and I am now going to go ahead and recognize my payments. So again, telephone expense. So this is just for the telephone and internet, right? That's it. That's the expense that I encounter. The phone is completely separate from this expense. So here I am, all right? It is now July 31st, okay? I owe $139.47. Oh, sorry, $139.97. So that should increase my account by $304.93. Okay? Now that's done. We're going to go to my liabilities. So this is what I was talking about. If I scroll down in my liabilities, I've also created a notes payable account. And notice this. Here I bought my iPhone for $863.76, right? Remember, most cases that a lot of cell phone companies, they'll try to finance the phone for you by making you do a contract with them for 2 years, so you make a monthly payment. So in this case, my monthly payment is for $35.99. So times that by 24 months, your total amount that you pay for your phone is $863.75. So once again, the day that you pay, you're going to pay your portion to your phone, and you're also going to pay the second portion to your actual telephone utilities to make up the total balance on your statement from telecom communications. Okay, and that's what you essentially will do. But in this case, we're not paying it yet. We're not making our payment yet. We're just recognizing that we received a bill from NV Utilities and that we are recognizing that we will be making a payment for the telephone expense later on. So again, telephone expense for July. Okay, and it is okay, I'm in the wrong one. My bad. Okay, on accounts payable, 734. Telephone and we're going to increase our bill by $139.97. Okay? So then what is next? Yes, replenish petty cash. Now, what expenses do we need to recognize? So here, Tim, on the 19th of July, Tim went out to buy office supplies. Now, who is Tim? Tim is another person we hired. Okay. Albert, right? I sent Albert out, or Bob sent Albert out to go buy some more medium plastic cups. He bought an extra 500 cups. So once again, he purchased it on the 24th of July. So that's why the adjustment looks the way it is, because the adjustment happens at the end of the period. This one, he purchased it on the 24th. So this happened before the adjustment happened. Okay? So as you can see here, this is what the total receipt amounts were due for, right? We have $187.16 for office supplies, and we also have $54.13 for those cups. So let's go ahead and recognize those expenses first, or I'm sorry, those aren't expenses. These are purchases of assets. So let's go ahead and recognize them. First things first, right? The date. We recognize that someone bought office supplies. So that means we need to increase our office supplies. We also had someone go ahead and purchase medium plastic cups. Okay. And lastly, how do you reimburse the petty cash fund?
Checking.
You write a check to the petty cash fund, correct? Okay. So once again, what was my office supplies account? 11 800, okay? And then what was my medium plastic cups? Okay. And checking is 10-100.
17,763, right?
Okay. So once again, we purchased a total of $187.16 worth of office supplies, and Albert bought $54.13 of cups. And therefore, how much am I going to write a check out to replenish the petty cash fund?
241.29.
Yes, $241.29. And once again, I'm going to go ahead and write right here. To replenish the petty cash fund. So now I'm going to go ahead and update my ledger. So all of these are assets. So we're going to start for the very first one, which is going to be increasing my office supplies. So Tim, one of the workers, Bob sent him to go buy some more printer paper, some more ink, etc., etc. Okay, and then I'm gonna write here purchases on 7/19 because he bought the office supplies on the 19th for 187. 187.16. Right? Making my a balance in my office supplies to be $267.16. Okay. We also sent Albert to purchase some medium plastic cups, right? Insert another line in there. So again, 731, right? He bought 500 cups on 7/24. Okay, for a total of $54.13, which should bring your account balance now to $53.05. Okay. And then lastly, we also need to update our checking account. Okay. So 7/31, replenish petty cash fund. Okay. And we replenished it for 241.29. $2.29. Okay? 241.29. Okay? So let's go ahead and continue with this scenario. Now, what happened here?
This side apply for a second business credit card to replace the petty cash fund.
Okay, so what do we have to do here?
Nothing, we just apply.
Okay, but what else? What's the second thing that says here?
Close out petty cash fund.
Okay, so we're assuming because we already have our first business credit card. Most likely, you can always get a second one with no extra cost, or usually even if you apply for a second business card, they're going to give you the second one, right? It's going to be the same account, but you can always get multiple credit cards with different names on them. So in this case, for business credit cards, yes, you can have multiple business credit cards linking to the same account. Okay? So that's what's cool about having a business credit card is that if you have, 5 employees, right? You can each grant them a business credit card for them to charge for any many minor charges. So in this case, I'm applying for the second business credit card to be in replacement for the petty cash fund. So in case someone needs to go get something, they can take that and swipe the trick card, and they would get the card. Okay. So in this case, we're told to close out our petty cash fund. So how do we do that? How do we close out our petty cash fund?
We debit checking
We would debit checking. Good.
and credit petty cash.
Correct. We are going to debit our checking for the amount that's in the petty cash fund. So in this case, I'm also going to write here, close out petty cash. Okay. Checking is 10-100. Petty cash is, I think it's 10-200, if I'm not mistaken. Petty cash fund is 10-200, yes. Okay. And let's go ahead and take a look at our petty cash fund to see how much cash is in there. So here it is. We're at petty cash fund. How much is my petty cash fund worth?
$500.
It is worth $500. So that means I'm going to take the full $500 that's in there, and I'm going to place it all into my checking account. Okay. So $500 there. So here, since I'm already here, I'm going to close out petty cash. Okay, so I'm going to credit my account for $500, which should give you your account balance of 0. Okay. And of course, I deposited the money into my checking account, so I need to recognize that. Okay. So that means your account balance right now should be $13.97.48.13. Okay. All right. So then, what has happened next?
increase in sales, increase your cash in the register to hold at least 800 at all times.
Mm-hmm. So what did we do here? Let's take a look at our ledger account and see how much money is actually in the cash register. Okay, right now, I only have $310 in my cash register at all times. I need, because of all the sales that I'm doing now, I need more money in my cash register. So, what am I going to do here? Good. We need to add to the cash register. So, cash in register to make it reflect 800. Right? Now, how do I put money into the cash register?
One check.
You're going to go write a check, or you're going to go to the bank, tell them to cash out this check, and tell them the exact cash that you need. Like, I need 20 20s, I need 50 10s, I need $100 bills, whatever you need, right? So you need to write a check. Okay? Now, right now, I should have $310 sitting in my cash register as of now. So how much more do I need to put in there to make it a total of 800?
490.
490. All right. And I'm going to put here increase cash supply for register. Okay. So here, since I'm here already, 731, I'm going to increase cash in register for $490 to give me a grand total of 800 in my cash register. Therefore, I also need to take away, right, increase cash in register. That means I need to take away 490. Okay. All right, good so far. So we're going to go ahead and continue and do these last two scenarios, and then from here on out, you're responsible to complete all of the depreciations on your own, okay? And follow the rest of the scenario throughout. So this part should be fairly easy, okay? Because depreciation, we've done it multiple times, all right? It's pretty easy. You also are responsible for office supplies expense and to accrue this right here. Now, one thing I need you to note here is that Tim is a salary person. He earns a total of, I should have put this in here. He earns a total of $960 per paycheck because he's salary based. Okay? Now, here he works 12-hour shifts 10 days a week. 10 days per pay period. So that means there's only 10 days that he actually is going to encounter. So that means the way that you would calculate this is divide it by 10. Oops. right, to get how much money he's going to earn per day, which should be a total of $96 per day. Does it matter how many hours he works? No, because he's salary based. So he gets paid no matter what. Even if he calls sick, if he takes vacation, we're still going to pay him because he's salary based. So he's going to be earning $96 per day. Okay? Per day. So make sure that you make a note on that. So then when you calculate or accrue for Tim's earnings, it's based on this, okay? Yes. Okay, that's all that you're responsible for. So let's go ahead and finish up the last two segments and then we'll call it the rest of the day off, okay? So here, what happened here? Who is the 24-hour store? They are a customer. And what happened to them?
They missed 2 payments.
They've already missed 2 payments. So we sent them 2 invoices, right? Or, well, we'll take a look at the subsidiary ledger in a second. We sent them bills, and they've already missed 2 payments. So in that case, we are going to write that there doesn't seem like they're going to pay us, right? So in this case, we're going to transfer the amount that the 24-hour store owes us and transfer it to our allowance for doubtful accounts because it's potential money that we may lose. So let's go ahead and take a look at our subsidiary ledger and go to my customers. So here we are, the 24-hour store. So we sent them a total of 3 bills, okay? One, we sent it on July 3rd. We sent the second one on July 10th. And we just recently sent the third one on July 25th. Now, of course, with our terms, right, that means we calculated our discount dates and we calculated our due dates. The 23rd, he missed the first one. The 30th, he missed the second one. So lastly, we are assuming that because he didn't pay the first or the second payment, we're going to assume he's not going to pay for us for any of it. So we're going to stop services to the 24-hour store, and we're going to write off everything that he owes us. So in grand total, how much does the 24-hour store owe us? How much in grand total does the 24-hour store owe us?
860.55.
860.55. So therefore, it's going to be considered as an allowance for doubtful accounts. So let's go ahead and journalize this. We're going to recognize that what? How are we going to recognize that this person owes us money and that is no longer going to pay us?
Liability?
No.
Oh, no. Sorry.
Okay. Okay. So there's 2 key factors. If you guys remember from chapter 10 when we're dealing with receivables. This is during the year, okay? We recognize that we know exactly who owes us money, right? The 24-hour store. We know exactly how much the person owes us. So how are we going to recognize that this person isn't going to owe us anymore?
Bad debt expense.
Not yet.
Not yet.
that's going to come right after. This is during the year. All right? Okay. First, we got to recognize what? Can we account for all the accounts receivable? If this person decides to fault on their payment, can we recognize that we have a grand total of accounts receivable? Let me see. Let's go ahead and look for it. Accounts receivable. Here we are, accounts receivable. Can we say that we have a total of $3,327.02?
No.
No, because we have someone who isn't paying their bill, right? What's the contra account to accounts receivable?
Allowance for doubtful accounts.
Yes, so during the year when you know who owes you money and you know how much and they tell you that they can't make a payment, you're going to automatically recognize the allowance for doubtful accounts. Okay? And you're going to take it directly off of the accounts receivable. Okay? So here, my accounts receivable account is 11,000, and my allowance for doubtful accounts is 11,100. 11,100 and 11,000. And how much is the amount that the 24-hour store owes us?
$860.55.
$860.55. So here we're going to write off that we are going to not be able to collect the $860.55. Right? And I'm going to go ahead and write the 24-hour store uncollectible debt. Okay. So let's go ahead and update our account. So here, the allowance for doubtful accounts. Oops. There we go. The allowance for doubtful accounts. Okay. Here we have a beginning balance because remember when we had the previous bad debt expense, it was for a credit amount for the 76 and 60 cents. Here we're recognizing that the 24-hour store, so I'm going to go ahead and write the 24-hour store AR, which is accounts receivable, that they owe us, which is for the $860.55. So let's go ahead and calculate this. What are you going to notice here?
Negative amount.
Yes, you have a debit balance in the allowance for doubtful accounts. So this is exactly what I was talking about when you're dealing with the allowance for doubtful accounts. Where does a debit balance come from? Where does a credit balance come from? And this is exactly it right here. If people owe you money and they don't pay, you're going to increase your you're going to decrease your allowance for doubtful accounts and make it a debit balance. If someone does end up paying, right, or every time you calculate your bad debt expense, you're going to create another credit account, which increases your allowance for doubtful accounts. So here, this is exactly why, for this example here, where we got a debit balance in the allowance for doubtful accounts. Okay. And we also have to adjust our accounts receivable as well, right? Because we have to take off the 24-hour store debt, okay? Which we know is going to decrease our accounts receivable by $8 24.6055, leaving us our account balance in our accounts receivable to be now 24.6647. Okay, so that is that. Okay. So then what has happened next?
Estimate allowance of doubtful accounts based on 5% accounts receivable balance.
Okay, so we know what our accounts receivable balance is right now. It is now 246647. So let's go ahead and calculate how much is 5% of 246647.
$123.32.
Okay, so 246647 times 0.5% gives you 120, what was it, 123?
123.32.
Yes.
123.32. That's the estimated balance. Okay. Now let's take a look at our allowance for doubtful accounts. We currently have a debit balance of $783.95. So this is the same exact concept I've been teaching you in chapter 10. We have an estimated amount of 123.32. We currently have a debit balance of $783.95. How do I journalize my bad debt expense?
Bad debt.
We have my bad debt expense, and we're going to recognize our allowance for doubtful accounts. Okay. Okay. So, do you guys remember what is the idea? So if you estimated that $123.32 is to be uncollectible, and you currently have $783.95 debit balance in your allowance for doubtful accounts, how much are you going to recognize for your bad debt? All right. So this is the whole concept where we need to recognize which method we're going to use, right? We're definitely using the allowance method, right? I'm already giving it to you that it's 5% of accounts receivable. And the estimated amount is 123.32, right? So if that is 123.32 of my accounts receivable is to be uncollected, I currently have a debit balance of $783.95. What should be my adjustment? Not minus, not minus.
So it's 907.27.
Good job. And what did you do? So here, because we have a debit balance, right? Our goal is to get to 123.32. So in this case, we need to backtrack, right? Because we have a debit balance, our notion is that we need to add our estimated number to our balance to get the 907.27. So 783.95 plus the 123.32 gives you 907.27. That is going to be my adjustment. Good. Okay. So remember, if let's say we didn't write off this debit, right, and we had this credit right here, how much do we need to get to reach 123.32? Right? So just remember, that's going to be on your exam. Okay, to be able to calculate the bad debt expense. So then this one, I'm going to say to write off bad debt. Okay. So since we're already here in the allowance for doubtful accounts, I'm going to go ahead and, where is my number at? Okay, I'm going to write here right, 5% of AR, right? And we're going to credit 907.27 to bring our account balance now to 123.32. Okay, 123.32. Right? We're also going to go to our expense account. So scroll all the way down here. We are bad debt expense. Okay. 731. Bad debt, 5% of accounts receivable. Right? So therefore, we're going to debit 907.27. Okay? And that is where we're going to stop off for today. Right? Any questions in regards to these adjustments? So once again, you are responsible to finish up the rest of the adjustments, okay? That means it's just a depreciation. This is the easiest section I'm giving you, okay? So we've done debt depreciation before. And if you open up your depreciation tables from, pulling it from the previous, on the Google class, you're going to notice that we have all of the previous ones from the previous month, and I've also indicated a few extra things such as the phone, okay? And what you're going to be responsible doing is look at your scenario, read what it says, and follow through exactly how to depreciate each item, okay? Now the dates that you're going to be given, right? If you use your ledger should tell you when you purchased the items. Okay, straightforward. You have all the information you need to complete the depreciation tables. I already gave you the ledger. I have already given you the depreciation table, so compute them. Okay? All right? And then once again, I gave you this small detail about Tim. Tim is our salary person, okay? He is someone that we hired to make coffee for the customers, and we're paying him on a salary basis. Okay. Other than that, you already know who Albert is, right? I've supplied you the subsidiary ledger as well for you to compute the commissions expense. But if you notice this too, if you look at the subsidiary ledger, you're going to notice that Tim is going to be under employees. Okay. And yes, so I already sent you that piece of information. Okay. Other than that, have a good rest of your day tomorrow. Wednesday, we'll pick up on completing the adjusted trial balance together and then completing the rest of the financial statements together, okay? All right, any questions? If not, you guys are free to go.
Thank you. Have a nice day.
All right, you too, guys.